Why the stock market is falling right now, and what you should actually do. Right now, the stock market is falling. Millions of people are watching their money disappear, and most of them have no idea why. But there's one simple reason behind it. And once you understand it, you'll never panic about the market again. Let's get into it. Let me paint you a real picture, using real numbers, right now, today. The S&P 500, that's the index that tracks 500 of the biggest companies in America, just closed out its second losing month in a row. And the Nasdaq, which is heavy on tech stocks, has fallen almost 10% since June. At the same time, oil prices are climbing, and long-term government bonds, the 30-year Treasury, are paying investors over 5.2% just to hold them safely. Now here's why that combination matters. When bonds, which are boring, safe investments, start paying you over 5%, a lot of investors start asking themselves a simple question. Why would I risk my money in the stock market for maybe 8 to 10% a year when I can get over 5% guaranteed and safe? That question, multiplied across millions of investors, is part of what's pulling money out of stocks right now. Add rising oil prices on top of that, which makes almost everything more expensive to produce and ship, and you've got a mix that makes investors nervous. Think of it like this. Imagine you're at a party, and someone suddenly turns the lights on bright and turns the music off. Nobody panics instantly, but people start looking around, start heading toward the door, just in case. That's what's happening in the market right now. The lights got a little brighter. People are heading toward the exits, just in case. Let's make this real, not just numbers on a screen. Take Meta, the company behind Facebook and Instagram. Their stock dropped after they told investors something simple. We're going to spend even more money than we planned on AI this year. Now think about that from an investor's point of view. You own a piece of a company. That company just told you, we're going to spend billions more than expected, and we're not 100% sure when it pays off. Some investors love that. They believe in the long-term bet. But a lot of investors got nervous and sold. That's not the market being irrational. That's thousands of individual people, just like you, each making a personal decision based on fear of the unknown. Here's another real example. SpaceX, Elon Musk's company, went public a couple months ago. Their stock has actually fallen below the price it launched at. Their very first earnings report as a public company is coming up in just a few days. And investors are nervous, waiting to see if the company can prove itself now that it's not just Elon's private dream. It's public money on the line. You see the pattern here? It's not one big mysterious force crashing the market. It's real companies making real decisions and real people reacting to those decisions with real money. Multiply that by millions of investors, and you get what looks like chaos on a chart. But really, it's just fear spreading person to person. Here's something nobody tells beginners. This is not new. This is not the first time. And it will not be the last time. The stock market has had a correction, meaning a drop of 10% or more, roughly once every 1 to 2 years throughout history. It's not a bug in the system. It's part of how the system works. Think about it like weather. You don't panic every time it rains. You know rain is part of the cycle. Storms come, storms pass, and the sun comes back out. The market works the same way, except most people never learned that, so every storm feels like the end of the world. Warren Buffett, arguably the most successful investor alive, has one simple piece of advice for moments exactly like this one. Be cautious when everyone else is greedy, and be brave when everyone else is scared. Right now, a lot of people are scared, which, historically, tends to be exactly the moment smart, patient investors start paying closer attention, not panicking. That doesn't mean you should throw money at the market blindly. It means fear is not a strategy. Understanding is. So what do you actually do with this information? Let's make it practical. First, check your time horizon. If the money you have invested is money you won't need for 5, 10, 15 years, a few red months on a chart barely matter in the long run. History has shown again and again that markets recover. If your money is invested but you need it soon, that's a different conversation, and a dip like this is a signal to be more careful. Second, resist the urge to check your portfolio every hour. This sounds simple, but it's one of the most powerful things you can do. Checking constantly during a dip only feeds panic. It doesn't change your returns. It just changes your stress levels. Third, separate the news from the noise. Rising oil prices, Fed decisions, earnings reports, these are real factors. But headlines are designed to grab your attention, not to give you calm, balanced advice. Learn to read the facts and ignore the panic language wrapped around them. Fourth, this is often when disciplined investors quietly keep contributing. Not gambling, not going all in, just continuing their normal plan month after month, whether the market is up or down. That consistency over years is what actually builds wealth, not trying to perfectly time when to jump in and out. None of this is exciting. None of this will make you rich overnight. But this is genuinely how patient money grows over time, while panic money gets eaten alive by fear. So here's the truth. The market is red right now. That part is real. But red on a chart doesn't mean the world is ending. It means fear is currently louder than logic. And that flips eventually. It always has. The people who actually build wealth aren't the ones who panic sell the moment things turn red. They're the ones who understand why it's happening, stay calm, and keep making smart decisions while everyone else is reacting emotionally. That's exactly why I make these videos, to take what sounds complicated and confusing and break it down into something you can actually understand and use. If this video helped you make sense of what's happening in the market right now, do 3 things for me. Hit subscribe so you don't miss the next breakdown. Drop a comment telling me what confuses you most about investing right now. I read every single one. And share this with that one friend who's been panicking about their portfolio this week. They need to see this too. I'll see you in the next video.